what I would do if I started investing in 2025. For those of you who don't know me, my name's Ronald Bell. I've been in crypto since 2015. I've made over $10 million in that market. Now I run SRB Crypto, where I teach others to get rich via crypto. Now I also have SRB Money, which is a free Telegram, money focused, and you guys can join that until ideally you get enough to actually join the big group that I run. And yeah, let's get into it. Step one, have the right mindset. Stop chasing quick cash. See, most new investors come into crypto kind of with a lottery mentality, like a lottery ticket mentality. They think that, how do I quickly turn my $100 into $100,000? And that's sort of a mentality. You're not really learning anything if I just post signals and pump signals and invest in this low cap and invest in this. If it was that easy, like everyone would be doing it. It's extremely risky space. It's very likely that you're just going to lose whatever little you had, versus learning a structure, learning to build a portfolio, learning how to allocate capital to actually have something that lasts for the long term. So the first step is eliminating that short-term mentality. Understand that with crypto, we've been operating under a term of a 4-year cycle. Bitcoin halves every 4 years, meaning the block rewards halve every 4 years. So it's kept Bitcoin kind of where it has its 4-year bull market, or 3-year bull market, 1-year bear market generally. And that's been something that's kind of fixed and something that's been consistent with the market. So understand how the markets work so that you can time to be in that bull period for as long as possible and then out during the bear period. Because you don't want to round trip your bags. You don't want to make good money and then round trip it back to where you started or less. That's quite a bit worse. So you have to understand how to time the market as well. And that's what I'm here for. Step two, how I would structure a portfolio and what I would invest in. I would understand that you have your high cap projects, and that can be 50% of your allocation. And then you would have 25% as mid caps. And then in my view, 25% speculative plays. They're the risky ones. They're the shit coins, the meme tokens, the ones that can do the 10x. Maybe they can do 100x, but most are going to very likely fail. So something like that. Similar to a VC portfolio structure. When I was a VC, we had a concept of you invest in 10 things, 6 fail, 1 is okay, 1 is just good, and 1 can be a massive success that justifies the rest of the other 9. That's generally how investing goes. Very similar to structuring a portfolio. So I would understand that you can have your 50% of the Ethereum, Bitcoin, maybe you have another project that you really like. Maybe you like Solana, maybe you like Polkadot, maybe you like BSC, like Binance Smart Chain, BNB, and others. So that can be your meat of your portfolio, 50%, because time will bail you out. Like if you actually plan around it, like time is going to bail you out over cycles. So if you fuck it up and get it wrong, and that's still 50% allocation over the cycle, like over the next few years, will bail you out. Like Ethereum's going higher, BNB's going higher, Solana's going higher, Bitcoin's going higher on a long enough time frame. Like that's the truth of the matter. So even if you fuck it up with the other 50% that are more speculative, you'll still get out and not lose money, like into the future. But ideally, when the Solana chains, the Ethereum chains, and all of those chains, you're invested in the altcoins under those. So the smaller cap altcoins, utility plays, and meme tokens of that specific chain, that layer 1. As those layer 1s increase, the others are like a higher beta play on the chains, on Ethereum or on Solana or on BSC or all of those chains. So that's generally how it works. Your Ethereum might go up. Maybe Ethereum goes to 5K, and then you look at Chainlink, and Chainlink's like $15, and Ethereum goes up 150%, but then Chainlink goes up like 300% because it's a higher beta play. It's still a utility play. It still has like a point to exist. It's still a reason to be in the space. Oracles are still important, but you've treated it as a higher beta play, similar to DeFi, similar to all of these other chains. So that's how you would structure a portfolio. How you would go below that. So you have your mid caps, 25%. Your mid caps can be the ones, maybe a couple of $100 million up to $1 billion. And then below, in my view, like a shit coin, like once you go under the 25, that last 25%, I believe it's just the memes and things that are under like 50 million. Some guys are happy to invest in memes that are a few million. Just understand the lower the market cap, yes, the higher the theoretical return, but the bigger the risk. There's simply a bigger risk attached to it. It hasn't proven itself yet. Certain memes, and guys ask me what memes and things will stick around. It's more likely to be the ones that haven't rugged yet. Like if a meme token is 100 million and it hasn't rugged, it might stick around, versus, and it's actually got some history trading in those ranges. And I think that a big moat around memes and will be actually the exchange listings, because the certain ones are just going to be stuck on dexes forever. And the normies and people who, when they come into the space, they're less likely to buy them. Because I understand with meme tokens and things like that, there's a massive dilution occurring because of pump fund and because of those token generators, so to speak. Like it's very easy to launch a token. So understand how the market's changed, how it's worked. We used to get, maybe in a day now, now we're getting as many coins and tokens launching as we used to get in like 1 year. So that has changed the sphere, that's changed the whole sector. It's changed the game. Heavy dilution, very similar to fiat, which is quite good for Bitcoin because obviously it can't be diluted. You can't print more coins. It's quite bearish for ultimately memes and things that are a very lower barrier of entry. Anything a low barrier of entry that doesn't have a moat around it will be diluted to the shithouse because bigger and bigger celebrities launch their coins and tokens. And as they have a bigger audience, they're going to get most of that like initial spike. So you're constantly competing. Like there are people waiting for Kanye coin and all of this stuff. And that's the issue with memes and stuff like that. Like they're giving a crypto away. So you're giving your Solana, Ethereum, some people give Bitcoin, whatever you're giving away to get a useless token. And that person's not they're not a crypto believer as much as they pretend that they are. It's all there. You're just talking to their marketing team on X. They're not actually, most of them sell their account for a brief time so that a marketing team can launch a coin and just give them a cut. And that's how it works. And then they just dump for fiat. So again, you become a net seller as you give your crypto over to people who are just going to sell for fiat. So be very careful with that sort of mentality. And that's my take for structuring. Number 3, understand rotations and what's sort of coming into the future. My big take is going to be AI. It used to be DeFi. Like I was a big DeFi bull when DeFi had first come out. And though I do think DeFi will go interesting again, which is Aave and those sort of protocols, Moonwell and a couple others. But DeFi will get popular again when rates start to go down and people look at that yield and think, oh, I don't want to keep my cash in the savings account for 3% now, or the bond market's going down. I don't want to really take that sort of thing. I'm happy to put more into crypto as a risk. I'm happy because those DeFi yields of 5% start to get more attractive over time because people are ready to take more risk with their money as well because they have to, because interest rates have gone down. People think, oh, I'm not happy to take my 3% or 2% or wherever rates end up. I think that they're going much lower. So people have to take more speculative risks with their capital into those sectors and those like protocols and things like that to still get a good return. And then in itself, it locks a lot of capital up, like it locks more capital up into the market. Because when you lock up, let's say you lock up like $1 million or you lock up this and that, a lot of them, they can still use the tokens to invest in other projects. So it's kind of like lending on a house, very similar to that locks them up. See, the housing market and the housing economy is so crazy because if you buy a house, you don't have to sell it. So there's a lot less houses on the market because you can just lock your house up via like financing it and then get another house. So that's the issue with housing and like leveraging. There's a lot of negative gearing and things like that can come into play. So there's a lot less sellers of houses because they don't have to sell. Like that's how the property market is going to go into a much bigger bubble again than it has. It's just the way that it goes because people still also can get a very good yield on it compared to what they were getting via like a 30-year loan, something like that. Like the maths just adds up. It's kind of a no-brainer. That's sort of a sphere, especially when you have funds and things kind of cornering the market, ultimately will control people via leases. And that's what's to come. But I'm a big believer in AI. Like I think AI is going to be the sector into the future. I saw the Stargate project with Trump and a couple of others for OpenAI as well. They've invested $500 billion or at least plan to into that specific sphere. I think that with data centers, with like power, with the grid itself, like all of these things, I believe they'll probably have to bring out nuclear power or some sort of a next beast, so to speak, because the AI itself runs on power, runs on data, and the data centers will need to expand and the power will have to expand. And yes, the tech gets better and more efficient with using electricity, but it also gets bigger, like it continues to grow at scale. And it's also something that we haven't seen before. So I assume that it can be much bigger than anyone believes. But I think that sector, AI, will be very hot with crypto. And then I'm happy to die on that hill because I'm heavily invested in that sphere. Is that I think that because your average normie can't, like normal guy, even me, any investors, you can't really invest in like OpenAI. Like you can't get into those rounds unless they're already astronomical. Like you can't get into those like funding rounds until the valuation is huge. You want to invest in AI, but you're investing through like NVIDIA, AMD. You're investing in through Tesla, OpenAI. All of these valuations are already huge. Like you can't get that 10 to 100x that you could have gotten, although maybe it's arguable that there might still be into the future with OpenAI at 10x, but it's quite unlikely. So you're already investing like at an astronomical valuation. You're investing in valuations that they're all happy to cash out in. So that's the problem. So that's why I think that a lot of people will be investing in AI via crypto because they won't have anywhere else to go. Like they won't have anywhere else to move their money and they won't be able to invest because they're not institutional. And they're also not like family and friends of developers and guys actually building the tech out and guys at Silicon Valley. So they won't have those same opportunities, like they just won't exist. So I think that they'll have to speculate in AI via crypto, like that will be a sphere. And I also think that sector will go to a few $100 billion valuation. And I think now it's like 40 or 50 billion. So that sector is going to, in my view, explode over the next, I would say 2 to 3 years. But the singularity is not guaranteed. I believe it's already occurred, but it's not fixed time. But obviously once it is noted and once it has actually happened and been documented and people can actually see it, I think that sphere and that sector will start to explode with froth. It'll get very speculative. And because I understand with AI, I was thinking the same thing. I was buying Bitcoin when it was $800. And people would tell me this is 2015. People would say, oh, it's this money, it's drug money, it's money for the dark web. It's never going to really amount to anything. Kind of a waste of time. It's very risky. You're going to lose everything. Can't you see that it's crashed 80 or 90% before? It's not really going to succeed. That's the same thing because you're not buying surety. Like understand that when you're buying low cap projects or you're going to be early in AI, you're not buying surety. You're buying at a time where people don't really believe that it's going to be anything. So the AI sector, it's people know that it's going to be something big, but they can't invest. But they'll invest via crypto, I believe. That's how the normal people and average people will be able to speculate in that sector. Ultimately, the cryptos won't amount to shit. But it's still a way that they can invest in the market and speculate, and it'll be exciting, similar to .com. I think that will be its own massive bubble within crypto. That'll be a big thing. But that's the same thing, right? Like now with Bitcoin, you have ETFs, you have all of these institutional services, you have everyone coming out, you have big investors like Saylor, guys coming out saying, oh yeah, crypto is a massive thing and Bitcoin itself is the future. But back then, it was just considered a scam and scam money and scammers money and shit. And anyone invested in it was like, I needed to be audited and checked for, committing crimes. So the true believers as I was, have gotten rich from that sort of a concept. But understand there are still sectors that are like getting into Bitcoin early. AI itself is that sector. See, people can't really fathom that yet. And then when people are talking about AI, this has happened and that, the sector will be much hotter. Like you'll be buying 5 or 10x higher. That's just the way that it goes. Like that's the nature of markets. With surety, when everyone's talking about it and it's less risky and it's more of a sure thing, then there's less money to make. That's just generally how it works. Step 4. How to avoid losing money in crypto or losing money investing or losing money in 2025. Big thing is not going all in on hype. So a project that's already heavily marketed, already heavily posted. If you see a celebrity posted, if you see any influencers with a high amount of follower count posted, understand that you're the exit liquidity. I've been on the other side with VCs and a lot of that is paid. So you got to understand with crypto, there's no one talking about a crypto that's either not paid or doesn't hold a massive allocation. And in most cases, both. That's the way that it works. Like that's how it works. Understand with Cointelegraph and all of those platforms, you can pay them to post whatever you want about a project like that. That's how it works. So they're working in tow with the VCs and with other people that hold large allocation. And they're usually using you or the celebrity who also doesn't care because they're just a mouthpiece to be paid to be exit liquidity. Like they'll say whatever they're told. They're essentially puppets for sale. That's how it works. So that's the first step to understand. And then another one is understanding that the cycle will not last forever. Have an exit plan. That's what we do at SRB Crypto. We structure to trade the 4-year cycles. Do I believe that the 4-year cycle mold will break the cycle? Yes, I believe that. I've said it. This is the first, I believe, to say it. I think 4 years under Trump, I think the 4-year cycle itself will flip on its head. I think it's going to be the cycle that breaks. And instead of actually going into a bear market, the bear market ending when the halving runs up, usually ends around the same time. I think that we could top very close, much closer to the halving, sort of a concept. I believe that. I think that with a lot of the institutional regulatory changes, I think that, and the bigger players that I believe are to come, and I think that we're running an AI tech and crypto industrial revolution. I'm a firm believer of that. So I think that it's going to break the mold. And this time so you need a good exit plan. You need someone who knows the market and actually knows what's happening so that you don't get completely rinsed out. There's nothing worse than making like a 5x or a 10x and then round tripping it back and then actually losing. You put 10K in, you get to 50K, then a bear market hits, you don't realize that this drop is it's actually just going to keep dropping. And then you actually go down to like 5K portfolio, like you lose, even your initial investment gets halved. That's a giant slap in the face. Like it's very hard to recover from that. Warren Buffett, I don't agree with everything he says, but one thing that he says is of investing is extremely important. Do not lose money. Like that's a big part of it. It doesn't matter if you make less. It doesn't matter if you get less of a return, but do not lose money, especially losing money as your initial capital. Obviously you have to risk. Like someone like Warren Buffett is not going to get 100x, but nor do they really have to. But you're going to have to take much more risk if you're like brokey. That's just the way that life is. I would understand that also a lot of people don't have a good understanding of risk. If you're average, like average person, you need to, I've said this before years ago and people laughed at me, but you need to understand that you have to take a lot of risk to get rich. Like you have to take fucking massive risks to actually make money. The economy has changed. I said that when I said people needed to take risk and buy Bitcoin when it was 20K, and people were saying that it was crazy and it was a silly thing to say and all of this stuff because everyone thinks that they're smarter than someone who's made over $10 million in the market from zero. That it's just not true that they're not. You got to have a good appetite and understanding of risk, and you got to be able to mitigate it as best you can. Yes, by understanding time will bail you out and having the right investments, but also having the right balls. You have to have balls, like everything. Like God loves someone who has nuts as well. Like having balls is a big thing. You just have to have it. You have to try it. Like risk is a big part of investing, but it's also just necessary now because the sector has changed. It's a lot more speculative. You can't be a Buffett. Like you can't just sit in dividend stocks and ride the next, giant bull run. He arrived at time of a huge bull run. Understand like luck is a part of it. Yes, he knows a lot about investing, but luck is a big part of it. He's certainly not a master in the tech sphere by any measure. So that's my take on that one. Number 5, the best way to start around any budget. See, it doesn't matter if you're investing $500 a month, $50K a month, $5 million a month, like the structure and allocation is still going to be the same because it's all based on what you have. Because if you have X amount of expenditure at the end of the month, you're going to be able to manage the 5 million a month. It doesn't really matter. Like I invest right now, I don't know, I would say probably 20 to 50K a month into the markets. I started out investing like a few $100s a month, but now obviously my income's improved and I make a lot more money. And nothing has changed. Like nothing has really changed. I structure it based on when I want to take a retirement, based on my risk appetite, based on ultimately into the future. When I'm worth my 100 million, that's my goal. I'm going to, I would think, take less risk, buy more real estate and things like that. But I'm not where I'm at. Like I'm not exactly where I'm at yet. And that's the thing with investing in things they don't tell you. If you're very good at investing in one sector, often it's like business. Some people are really good at starting one business and they're masters of that sector and they make a lot of money in it, but they don't like it. It's boring to them. So they try and make money and get rich in another sector that someone's told them is faster or better or easier or cooler. And then they actually lose everything. Like that happens a lot, and that can happen a lot in investing. You only need to be the master of one market. I'm the master of crypto, and that's enough for me. Like crypto is a giant sector. It's still enough for me to get rich in. So I'm happy to play in that as long as I can. And I believe we still have, 4 to 6 years of good juice left in that market. And then after that, I believe that there'll be something else similar to what I tell the guys. Let's get rich in crypto. Let's get our 5-10x this cycle still. I believe that. And then let's get our 10 to 50 to 100x in the AI sphere. And then let's actually turn it into, life-changing money. That's how it is. Gains accumulate. You make your 5x, you make another 5x, and now suddenly it's actually money that's important. Like it's money that matters. It's not small money then. And that's my take on that one, lads. So lads, these are the tips and tricks for 2025. If you guys want to know more, you can join my paid group, so srbcrypto.com, or join the free Telegram, SRB Money. And I have a Stephen Ronald Bell Telegram too, which is very general chat. I'm in Dubai and there's a big helicopter landing on the roof there. So yeah, it's an interesting one. But yeah, it's crazy to come from such a small town and be in such a big city. I'll show you guys. Big, beautiful city from a small town. I grew up in Trogan South, a town of 200 people. So life is crazy. And if you get your investing right, you can actually have the freedom to be able to do whatever you guys want. All right, lads. Till next time.